this is Manesh Patel with IMTF Trade. Happy New Year. Welcome to 2023. A lot of people already talked about what's going to happen this year. It's going to be a bullish year, bearish year, and so forth. There's a lot of predictions out there, but let's go to the charts and allow the actions to tell you exactly what's going on. We're going to look at two different approaches. One is a very long-term approach, and then we're going to bring it down to a short-term approach. So let's begin the analysis.
Here's a simple chart of the E-mini S&P 500 futures. We put this time frame on a quarterly basis to get a good view long-term, okay? And we could even go back to everything that happened in 2000, 2008, and compare exactly what's going on now compared to those 2 points in market history where we did go down drastically. But each bar here represents a quarter. One thing I want you to notice, we've had 3 quarters in a row here that are negative. How do you know if they're negative? The bar is red. If the bar is green, it's bullish quarter. If the bar is red, it's bearish quarter. Look over here. This is when we had 3 bearish quarters in a row. If you look back in history on the E-mini S&P 500 futures, you had 3 quarters in a row here that signified a big movement going down. This was basically in 2007. This was a 2007, 2008 going into 9 downturn that we had. And you could see we had a 57% correction at that point. You look back in history, over here you only had 2. Over here you've had 3. When you had 3, it kick-started this again to go down. And if you look at the highs here, let's just look from here to here, this had a 50% correction, and this was the internet bubble bust too. So this was the internet bubble bust, and this was the real estate bust over here, the financial bust. So twice in history, when we had 3 negative quarters in a row, it's sat there and led to a 50% drop in the market. That's all we have for the E-mini here. But that means we can possibly do the same thing here. If you look for a 50% drop here, and remember, we're just looking for maybe past repeating itself. If the past repeats itself where 3 negative quarters in a row signify a downturn, then, and if it repeats what it's done before, which is at least a 50% return, 50% movement down, that's retesting this whole movement right there, which is pretty much the COVID lows, everything right there. Now, it doesn't mean it's going to happen, but you have to be very, very cautious. In fact, this quarter is very important. If we break the quarterly low here, right there, and close below it, and we get another negative bar, that is not going to be a good scenario at all. We have to sit there and have a bullish bar here. This really needs to break the quarterly high here. So this quarter, we're looking for whether if we're going to break last quarter's high or low. If we do, it could give us an idea which way this market's going to go. If it breaks the low, then it increases your probability to definitely get this 50% downturn here in total. And you could see here the 50% downturn, we already had 26%. So that gives you another what? About 14% more, 24% more to the downside.
Now that you have a long-term approach, let's zoom in to more of a weekly type of action. Let's look at the weekly charts and see what's going on week by week by week. Reason why is the long-term picture is great, but it needs to be supported week by week with actions to see exactly if it will happen, if that forecast will happen or not. So this is one reason why we talk about week by week, you look at actions to sit there and support your forecast. And that's what we're going to do. So let's look at the weekly time frame and see what we see right now on what's going on.
We now change the chart to a weekly time frame where every bar represents 1 week. We're going to keep this simple here. Notice this was the upward movement here since we had since 2000, since COVID and so forth. And then we kind of topped out here of January or beginning of last year. One thing I want you to notice is notice the highs. There's a high right there, pivot high, pivot high, pivot high, and pivot high. They are going down. There's not one that's equal at all. They're all been going down. So the last 4 highs that we had have been going down. The lows have been going down too, which is not a good scenario. So if you look at it, the highs have been going lower and the lows have been going lower too, which is not a good market scenario at all. It shows there's no real weakness to the bear side at all. You kind of need that to stop. So at some point, you need to come retest this high, either get to this point right there and break it, or the lows need to stop making lower lows. So something needs to happen in order for some weakness in this market to occur. But if you keep on getting lower lows and lower highs, that is not a good scenario at all. So right now, we have the last high right there. So the probabilities are high to come back to at least retest this, maybe even fall short of it. We don't know. But probability right now at the beginning of this year is bearish based on this. As long as we maintain this high right there, we are still going to slowly go down to the downside here. So we got to stop making lower lows and lower highs. Once we do, that will show you some signs of weakness on the bearish side. So possibly maybe some buying action will come in to stop this bearish trend completely. So these are the 2 things that we're looking at to see where the markets are at currently right now and what's going to happen in the next couple of weeks. Until we see some proof that the buyers are taking over and the bears are not in control anymore, the predictions are always going to be bearish to keep on going down. If you guys have any questions, you could email us at info@eiicapital.com. You could also join our free Telegram chat room right there. So you could see exactly what our predictions are, what trades we are globally, and so forth. Thank you.